Massive financial decisions hinge on today's breaking news. Learn how these developments could redefine your wealth strategy. Welcome back to the Dr. Fred Markets channel, where we dissect the most pertinent financial headlines impacting our portfolios and economic landscape. Today's news is fascinating and potentially game-changing as we see the S&P 500 and the Nasdaq edging closer to their all-time highs. This scenario could make or break your investment strategy as these indexes hover at these record-breaking thresholds. Let's consider the bigger picture. First, the anticipation of US-Iran talks is generating significant optimism in the markets. Why does this matter? Because geopolitical stability often translates into investor confidence, and confidence is currency. There's potential here for a market rally, particularly impacting futures such as those of the S&P 500 and Nasdaq, which are already near unprecedented highs. However, remember, markets are fickle, and overly optimistic bets could backfire. Speaking of the S&P 500, today brings slightly changed stock futures as it flirts with its peak. Live streams on CNBC have been buzzing with excitement, and with good reason. Yet, does this mean there's an open door for investors to jump in headfirst? History tells us that while such peaks lure investors, they also warn of correction. The key is caution and careful analysis, traits that separate savvy investors from the reckless. In the dynamic sphere of technology, Nvidia stands out today with an impressive 1.2% uptick in its stock value. As the company continues to dominate in graphics processing and AI advancements, interested investors might find it sitting in a strong buy area amidst the surge. This is complemented by broader bullish trends in tech, indicating that now might be a crucial moment for evaluating tech-related portfolio components. Meanwhile, there's an unfolding mystery around the airline industry. Axios is focusing on an enormous airline merger that's implicating none other than former President Donald Trump. Industry consolidation like this often reshapes market structures, influencing everything from ticket prices to international competition. But how much of this is real strategy versus political maneuvering? Thoughtful analysis is needed as this story develops, potentially impacting travel stocks and market volatility. Investment banks have also been busy, with Bloomberg reporting a record-breaking performance for Bank of America's stock traders. Fueled by momentum in the markets, this development highlights two significant points. Active trading strategies are paying off, and secondly, the unpredictable nature of today's market can offer lucrative opportunities for those who strike while the iron is hot. As we find ourselves about a third into this analysis, it's crucial to ponder a critical question. Could the optimistic forecasts surrounding the US-Iran talks be generating a deceptive calm before a potential storm? A classic setup for savvy investors to either capitalize immensely or lose significantly. If that doesn't instill a sense of urgency and strategic reflection in your plans, perhaps looking at contrarian aspects might. Let's consider how Bitcoin and Ethereum have seen minor declines today, at -0.62% and -0.18% respectively. The correlation between traditional market optimism and crypto downturns is an intriguing phenomenon. Could it be that Returning to conventional stock markets, it's intriguing how current tech strength is creating a magnet effect on Nasdaq. Nvidia's rise, particularly its new forays into AI technology, underscores what many predictions highlight. As businesses lean more into AI, accompanying tech stocks are poised for robust growth. Imagine the potential of AI-driven efficiencies and advancements. It's clear that the scope for market expansion is enormous. Investors who position themselves strategically in AI-linked stocks might realize long-term gains. Banks, as highlighted earlier, like BofA, thrive in momentum-driven climates, proving once again that financial institutions adept at navigating volatile environments are rewarded generously. If you're considering investment opportunities in financial sectors, analyzing how these momentum strategies work could illuminate possible avenues for your portfolio development. Now, let's explore what you should consider for the short-term versus long-term. Short-term investment might seek to exploit the imminent gains from geopolitical developments like the US-Iran talks. However, long-term strategy should not neglect emerging technologies such as AI and blockchain, where Nvidia and AI peers stand ready to redefine the tech landscape. This duality in strategy could stabilize your portfolio against unpredictable market conditions. In closing, I urge you to reflect on the potential portfolio actions you'd consider. Today's market revelations have underscored a crucial point. Volatility remains constant, and handling it with informed confidence is key to capitalizing on whatever the market presents. Whether you aim to feast on short-lived gains or allow your assets to grow patiently, the decisions you make now could resonate well into your financial future. Before you go, don't forget to subscribe to the channel and ring that bell icon so you never miss out on the sharpest market insights. Leave your thoughts and questions in the comments below. What developments are you trading on, and where do you see these market trends heading next? I'm excited to hear your perspective. Let's take a moment to delve deeper into the current trends that have financial analysts turning their heads. One significant movement is the ongoing evolution of technology companies, which continue to redefine the way we view traditional sectors. From artificial intelligence breakthroughs to developments in blockchain technology, tech-driven innovations are reshaping industries at a pace we've never witnessed before. Consider for a moment the implications of AI within the financial markets themselves. Algorithms and machine learning tools are becoming increasingly sophisticated, enabling faster, more accurate predictions on stock movements and even consumer behavior. This new edge may seem daunting, especially if you're accustomed to a more traditional investing approach. However, embracing these tools, rather than fearing them, can give you a competitive advantage in diversifying your investments. Furthermore, sustainability is no longer just a buzzword, but a critical component of many companies' strategies. Environmental, social, and governance (ESG) factors are playing a more significant role in investment decisions across the globe. Investors are holding companies accountable not just for their financial outcomes, but also for their impact on society and the environment. Are you incorporating ESG factors in your investment strategy? It could very well shape the. Now, let's talk globalization. While geopolitical tensions have put strain on international trade, they have also opened new avenues for strategic investments. Emerging markets have become a focal point for those seeking growth opportunities outside the confines of established Western economies. Countries in Southeast Asia and Africa, for instance, exhibit rapid growth dynamics and youthful demographics, making them attractive to forward-thinking investors. As you navigate these complexities, remember that knowledge is your most powerful tool. Stay informed and adaptive to shifts not only in markets but also in global narratives. This agility enables you to protect your investments while seizing new opportunities, a skill that's invaluable in both bull and bear markets. We're living in an era where change is constant and arguably the only certainty. Use this to your advantage by being proactive in your research and strategic in your execution. Financial markets may seem like a vast ocean of unpredictability, but with the right tools and insights, they are waters you can confidently swim. By leveraging technology and data analytics, you can gain deeper insights into market trends. These tools allow for more precise decision-making and help you anticipate shifts before they significantly impact your portfolio. Continuous learning and adaptation are crucial. The financial landscape is ever evolving, and what worked yesterday may not be as effective tomorrow. Stay curious, question assumptions, and always be open to new strategies that align with your investment goals. Remember, informed risk-taking isn't about avoiding uncertainty, but about managing it wisely to build long-term wealth.